Our 360 round. For that, I want to bring in today's panel to discuss PepsiCo's latest earnings and the state of the consumer. We've got Dale Smothers, President and CEO of RDS Wealth Management, and Alexis Brown Roberts, COO and Portfolio Manager at Alexis Investment Partners. Thank you both for joining us today. It's good to see both of you. I'll quickly recap some of the numbers for Pepsi to just catch people up. Adjusted EPS was $2.12. That beat expectations. Revenue, $22.73 billion. In terms of the forecast, that's essentially kind of flat. We saw pressure on volumes for North America volume, food down 1%, beverage volume down 2%. There was some better trends in global, but overall, it just seems like, and the bar honestly was lowered going into PepsiCo's earnings. Dale, why don't we start out with you? We know you hold PepsiCo, but you say barely. Let's talk about what you like and what you didn't like in their latest results.
What we like about PepsiCo and the reason we bought it in the first place was the dividend, which is our strategy there for holding PepsiCo is the dividend that it pays and continues to pay, and we even see it rising from quarter to quarter. The results came back for us, because we didn't have a lot of need for the appreciation of the stock in our strategy. The results came back surprisingly good. You talked about international, which came back fairly strong, in our opinion. And overall, it was an earnings beat, which is wonderful news for us as we saw PepsiCo post its first quarterly earnings miss in nearly 5 years last quarter. So again, it's coming off of not a lot expected out of the stock. It gave us better than expected results, and we're very happy about that as it continues to pay that strong dividend.
Alexis, I'm curious to know your views. You say we do not own PepsiCo and are not looking to add it in the foreseeable future. Was there anything about the results today or the earnings call that changes that view?
Well, thanks for having me on, Diane. And honestly, no. I understand the appeal of the dividend for sure, and the turnaround story that some folks may see as PepsiCo has been pretty beaten down this year. And you made a good point, but I think it was more of a less bad than expected earnings call. And honestly, in this environment, while Pepsi is doing all the right things to try and turn it around, it's really poised, as most consumer stocks are, to fare the worst when it comes to tariffs and other news. And at Alexis Investment Partners, we're not confined to consumers. I'm not a consumer analyst. We're tactical managers with the goal of making our clients money. And so we have a broader range of tools that we can access than just consumer stocks. And in this environment, we'd rather be in other areas than a consumer staple like this.
Okay, so I want to go back to your thoughts on this. Look, the stock is rallying today, Dale. You said you're very pleased with the performance today. And I know it's obviously not a top holding, but one of the things you're paying attention to, and probably why it's not a top holding, is the Ozempic effect. What are you paying attention to there and its impact to PepsiCo in that space in general?
You're right, Diane, and Alexis makes a strong point here. It's not something that I would be running to buy a lot of right now. We recently trimmed the position and held on to it specifically for the dividend. And the reason we had trimmed that position back in March was due to this Ozempic effect taking a significant chunk out of the snacks industry. The snacks business is a tough business to be in, and one of the key drivers for growth in PepsiCo in recent years has been its snacks business. That piece of the business is an important piece, and it's been under attack quarter after quarter after quarter. Again, still paying that strong dividend for us is the goal, but the Ozempic effect is real, and it's been real for other names like General Mills, ConAgra Foods, these names that have been under significant pressure due to the snacking habits of American consumers. But I'll tell you, Diane, if PepsiCo makes a turnaround and tries its best to meet an American consumer where they are today with this Make America Healthy Again agenda, we see a little bit of capital appreciation potential in this, and we don't have to look much farther than Coke, its main competitor, to realize that it is possible for a company like PepsiCo to still have a pretty strong stock in the future. Buy it for the dividend. The appreciation is a welcome surprise.
No, you make a good point because Coca-Cola has been an outperformer compared to the S&P 500 year to date, and obviously outperform PepsiCo. I'm curious. I want to widen this out and talk about the state of the consumer. Alexis, I want to get your thought on how you think the consumer is faring overall. We had retail sales coming in much better than expected today, up 0.6% in June. The expectation was just for a slight uptick, 0.1%. What's your thought on how the consumer is holding up?
Yeah, I think the consumer has remained surprisingly resilient in the face of all of this volatility. Not just that, but the UMichigan survey from last month was positive and really showing some strength there. And it'll be interesting to see what comes out this Friday. But again, it's not necessarily a place where we're looking to go. I think there's a lot more exciting stories. And we're also even just looking at broader equity exposure, given that there has been not just consumer resilience, but stock market resilience. I mean, we've fully recovered the S&P and we're reaching new all-time highs. And so I think there's also a question to look at with whether or not you should really be tapering down equity exposure to more neutral pockets as well. And that's what we're doing.
Dale, I want to get your thoughts on the state of the consumer. How do you feel like the consumer is holding up?
Alexis makes valid points there, which we also believe a cyclical trend to the S&P 500, maybe from some of these names that depend on the consumer remaining resilient, is not a bad strategy. For us, the S&P 500, we believe, is going to continue to tick higher. I wouldn't be surprised if we saw a 65 or 6,600 point S&P 500, which we made that call many times on your show, Diane, at the end of the year. I think we still see a potential for a rising market, and it's due to the optimism of the consumer. The reality of numbers, if we look at just the numbers, there's a lot of reasons that the consumer could, in theory, maybe not be as strong as they are, but the numbers aren't necessarily the emotional side of the consumer. They're still spending, they're still going out, they're still buying these products. And the American First agenda, if we see companies targeting the American consumer with American-made products, they also have a little bit more of a price advantage than these highly tariffed import-type products. The American consumer remains strong and resilient, just as Alexis said, and we want to take advantage of that in the stock market.
We have certainly been seeing that recently, and I hear this theme ongoing. Never underestimate the strength of the American consumer. We'll leave our conversation there for today. That's Dale Smothers of RDS Wealth Management and Alexis Brown of Alexis Investment Partners. Thank you both.